is Chris, and Tarantula is here with us as well. I'll kick off this webinar of December 18, 2014, where we take a look at a 2014 review and a 2015 forecast. The time has come to take a look at the entire year and see what we can expect. Last year we did the same thing, in fact, so I will be taking a look at that PowerPoint and seeing how well the forecasts actually proved out to be. All right, before we do that though, please be aware that this webinar is intended for a global audience. Please take into account that this session may not be suitable for everyone. To find out if it is and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, of course, trading for exchange is considered high risk and it may not be suitable for all investors and traders. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. By continuing, you agree with this disclaimer, and you can always request a copy by going to admiralmarketsglobal.com and selecting your appropriate entity and contacting that entity. Good. Thanks for your attention. Once again, welcome. This is Admiral Markets. So we're going to take a look at a webinar actually that was held on January the 2nd. So that is not exactly a year ago, but very close to it, where we took a look at the review we actually took a look at the forecasts. That was the first time we did that, so we didn't look at any past predictions. We can do that now though. We're doing it a bit earlier, I guess, than last time. Oh, wait, I actually, before I do that, I have to go to a new PowerPoint. We're actually literally going to go to the PowerPoint of a year ago. I didn't change anything. Here it is. Let's take a look. Okay, so this is from January 2. You recognize a lot here? All right. So the expected 2014 trends. I was talking about yen weakness, that the dollar yen is going to continue its major grand cycle upwards. So let's grab a chart and take a look if that is indeed true. And euro yen, pound yen, major uptrend, major movement. So, of course, these are. I mean, it's not as precise, perhaps, as can be, but I'm not exactly sure what I said at that time. We can see the PowerPoint though. Let's take a look at the weekly chart. January 2014 is here. So we just peaked actually at 105. We went into quite a long consolidation. We went into a consolidation, as you know, for 7 months, in fact, actually quieting down a lot. But eventually, yes, we did make that upside. We did continue with the dollar yen uptrend, and it was what I was expecting. I was definitely looking for dollar yen to continue. Eventually, if it takes 7 months, though, I mean, I have to admit, there wasn't a moment. There was not never a moment that I didn't have some hesitations. I think that's not quite normal. It's difficult to stay focused on 7 months, but ultimately, I was saying, really, if you want to boil it down to the to very clear lines in the sand, I thought it was about these two lines, right? Which side would this consolidation break to? It eventually did break to the upside. Right, so it tested the resolves, but it did move up. The euro yen. Let's take a look. This one, of course, because the euro, there was some euro weakness there, did pull down quite far. It was actually quite more of a bull flag pattern. Finally, it did move up, but it wasn't as grand as the dollar yen, perhaps. There was quite a consolidation with a slight of bearish hint for most of a decent part of the year, but eventually did move up. Oh, 1 second. Pound yen. Let's take a look. 1 second. Pound yen was here. Went flat. For the pound yen, this is quite flat, but still, of course, a lot of movement. This had a bit more upside at times. especially this upside because the euro was a bit more bearish than the pound. So the upside is more visible on the pound yen in general. So yes, fairly okay, I guess. Maybe took a bit longer than I expected. But eventually the yen did weaken. So that was correct. The Aussie weakness, I was thinking about the Aussie continuing to downside. I mean, we'll mention targets as well later on, by the way. And the euro odd and pound odd to get into a downtrend. So I was expecting Aussie to weaken against the dollar, but the Aussie to strengthen against the euro and pound. So let's take a look. Of course, these are just forecasts. I talked about forecasting in a previous webinar that it's just, of course, for fun forecasting. It's not about necessarily trading is different, right? We can capitalize in trading without forecasting. Forecasting is just a thing more for fun than anything. Let's see. Aussie was here. Now, I did test the upside more than I maybe imagined. Not 100% sure anymore. Eventually, it did make that downtrend as I expected here. As you can see, this part kind of retraced a bit further here, then went sideways awfully long. But then finally made the downside. Let's take a look at the euro odd. Euro odd, yeah, this is what I was looking for because we had a pretty good upside here, so I was looking for a bit of retracement. That was what I was looking for. So that, I think personally, was the most accurate so far. And then the pound odd also made that downside first. Right? That's what I was looking for. So I think also not bad. Pretty good. In fact, I guess on the Aussie side of things. This is how it looked like a year ago on the dollar yen at 103.20 at the end of last year. And I was looking for upside. Indeed, we reached 120. Ultimately, that was my long-term goal on the dollar yen. We've exceeded that, in fact, at the moment. Here you can see the dollar yen weekly chart. I was looking for price initially to go to 110. It didn't do that. And I guess it made option 2 where it made this consolidation and then indeed up to 120. You see that? Went for the option 2 here. Consolidation, then to 120. Aussie dollar was still at double bottom. Eventually Aussie broke the bottom and hooked back, went sideways and then fell. Dollar index weekly, the breakout to the upside happened and further and beyond that, in fact. Euro dollar weekly, we had the fall of this channel. So we're seeing this now at the moment, in fact, on the euro dollar to the downside. Pound dollar, we did move up indeed. We went to the minus 618. We broke this top exactly here, went for the second arrow, and are doing this at the moment. Pound yen weekly, I don't have any lines here, I'm not sure. All right, so here are some numbers. Well, dollar yen, I was at Q1 2014 was looking for 111. That was not true because it went to 105. The Aussie to 84 did happen, but I'm not sure if it was in the first half. I think it was in the second half. The euro dollar to 143 didn't happen. It stopped at 140. So I was expecting resistance at somewhere at the lower 40s. It turned a bit earlier. It did indeed bounce down all the way to 130. So that was good. So partly correct. The pound dollar to 167.50, yes, it went further than that. In fact, the XAUSD to 1090, no. Well, not in the first half. It's kind of the timing is the thing. It actually did happen, but it happened in the second half. It happened in the second half. It happened in the second half. This didn't happen, but this did happen. And this did happen. I was thinking that Swiss Kiwi CAD would be more flat. The Q2, I was thinking that there could be some consolidation on dollar yen or Aussie. It was actually the other way around, ironically enough. So it was actually the consolidation happened first, and then we had actually the trends. Should have switched that, which is a pity. The trend to the dollar yen did go to 120, and the Aussie is very close to 08. I mean, the Aussie has reached 81, I think. Let's take a look. It reached 81. So I would say that's fairly accurate over a whole year's time. So I'm just being the judge for the moment. Sorry, folks. I would say that's good. And this is the 120 target is good too. We went indeed past that 120. So that was all good. A year ago, I was thinking that in the second half, there could be a chance of dollar strength due to less tapering and the economy picking up and stuff like that. Now, the reason why I should give a bit of a background to 35% is because I thought that was a high percentage. Why do I thought it was a high percentage? Because making a forecast like that is usually wrong. So something like that to call, I think, you know, if anyone would have, if we would have asked probably people at that time, I think maybe half of the 35% would have expected it. So I was trying to, by implication, I was trying to say that I think there's a twice as likelihood that that will happen. And indeed that that did happen, that we got the dollar strength. So I think that if anything, this was my biggest correct forecast, was the dollar strength coming in. It was in the back of my mind that it would finally happen. It was about time, and the timing seemed right later in 2014. I was thinking a year ago. So that, I think, personally was the best one. The Swiss flat to slightly weaker, I think it's not a bad one, and it didn't do much. CAD actually weaker. CAD weakened, in fact. New Zealand was more of a mix, I think. But so basically I was expecting yen, odd, and gold to continue with the trend, then go to consolidation after that. Let's see. I thought I mentioned some targets on the euro dollar as well. Only these? Okay. I thought there were some different targets. Huh, doesn't matter. Yeah, the question what currency will trend next, I was thinking about the dollar, but the pound actually was also a pretty big trending currency, up and down. So I think that wasn't too far off. But anyhow, it's just a forecast. So let's continue and take a look at this year. Now this year, I'll be straightforward with you here. I have less of a particular forecast than last year. I'm not sure if the Vista is still in here, by the way, but the webinars are recorded. You can find them through YouTube. There's a channel of Admiral Markets, okay? So, yeah, I'll explain why I maybe have less forecast than last year. But first of all, let me show you the forecast that I have for 2015. I think that January 2015, I think we could see some consolidation on the dollar. Now, today's fall of the euro dollar and yesterday's fall that exceeded my the euro dollar fall went further than I expected. Kind of throws a wrench in what I was expecting. I thought we would see some consolidation throughout the holidays and then also January. It could still happen. We still might not break the bottom, bounce off the bottom, for instance. So let's see. But that was my original forecast. Dollar consolidation for a bit due to the holidays and maybe January, and then see a dollar trend continuation again in February or March. I was thinking 50-50 in February, but if not February, then March. The dollar to be trending up again. Therefore, with the euro dollar specifically, we stopped at 122.50. I'm expecting it to break the monthly support trend line and crash through the wedge and go to 113 as the very minimum target, I would say, and then with the potential extension to even parity. That's what I'm thinking is going to happen in spring, kind of starting in February, March, and continuing into May, perhaps June, stuff like that. We'll have to see exactly how far it goes, but I mean, there is that extension potential. So that's what I'm expecting on the dollar. More strength to come after some pause, after some sideways move, some rebound. This is my number one thing in mind, to be honest. This is the number one core forecast that I'm thinking of. It's the dollar trend at the moment that still could continue, I think, after a bounce here, because we're at monthly support. We could see some consolidation, some sideways movement at the support level like this. And then I would expect it to finally break. And well, so far the euro dollar downside has happened. I actually wrote in a blog in July that the dollar trend is around the corner. It's happening right here where the euro dollar was maybe at 130. Let me tell you, 1 second. The dollar was here, somewhere here, around one. No, not this. This is the right 30-minute chart. Sorry. No, here, 136ish here, like this. Because at that point, of course, I already had the idea, the forecast idea, back a year ago that in the 2nd of July, in the second half of 2014, we could see the dollar trend kick in. So when we had this impulse here and a weak correction, and then we started to move down, that's when I started to write a blog post, dollar trend, warning, big warning. I really wrote big, like, warning, watch out, dollar trend coming. Because I had the forecast already, and then the technicals were confirming what I had forecasted. So if there's any advantage of a forecast is that maybe you're mentally prepared for something, and when you see the signals, you get the confirmation and you're ready for that trend. These trends do not happen every minute, let's face it. So if you miss a trend, you might have to wait a while before you see another one. Right? It's not something, a lot of consolidations happen, so it's something you want to be on top of. So indeed, and boom, this big trend, right? So this is actually, I might be already wrong on this forecast as good the last year's one were. I'm not sure about this year because we're already seeing some acceleration away, so I'm not 100% sure now anymore. Yesterday, it seemed like that. I'm expecting at one point some bigger consolidation to happen for wave 4. But let's see if that happens. I could be wrong on this one. But that's what I'm still sticking to that for the moment, though. Oh. And then, by the way, let me go back quickly here. Basically, what we will see, this wedge here. So what we saw was from the rising wedge here, and a crash from the rising wedge. So basically, the next step would be to break through the rising wedge down to parity, let's say, or 113. So that is the idea. And if you look at the weekly chart, of course, you can see how beautiful the downside was. After this kind of divergence between these tops, slow crawl up, rising wedge, and boom, very nice. Expecting that momentum to continue on the dollar, especially against the euro. The pound dollar, I'm expecting to go down too. But the bounce up could be stronger than the euro. So the euro pound, I think, still more downside pressure. The pound dollar likes to make these spikes up and down. So yes, it is in a downtrend, but it could go up to the 50 fib. If you look at the euro dollar, ultimately, if you put a fib from this here to here, I wouldn't expect the correction. 1 second. I wouldn't expect the correction to go above the 38.2 fib, or the 50 at least. The very max 50, not above 130, before we continue lower. 128 seems more likely. If we get there, though, because as I said, this week has been turning more bearish than I expected. How about the pound dollar? Basically, I would expect price now, if we do get a bounce here, to go to the 50 fib instead of the 38.2. So back to 164 and then further down to 150. Something like a zigzag like this. Perhaps to 144. Now what if I'm wrong, if the euro dollar breaks that bottom of 122.50? Ultimately, I still think that the consolidation is likely, even if we break 122.50. We can still make a dip and then get a bigger consolidation. But of course, let's keep an eye. I mean, next week is not a great week for trading, and the week after not either. But the end of the month, I'll have to see where it is, and in January, see how to approach it. But if not here, then still above 120.50, above this bottom, we could get, at any point, we could get that consolidation. The ultimate level of invalidation is probably 120.50. As soon as we break 120.50, 120, then we're probably already just continue with the dollar strength right away. This is a mistake. I don't mean downtrend, I mean uptrend. Well, if the dollar trends, then of course the dollar yen will probably see continuation as well. At some point, though, I think that the yen will have to go in some kind of consolidation. It's already moved quite a lot. I think that, yeah, at one point it's going to go into some consolidation. If you think about the dollar strength, then a yen consolidation, yeah, it depends how the yen will react when the dollar is trending. That's a bit of a difficult call to make. Ultimately, I think if the dollar really starts to push against the euro, it will do that against the yen too. But there could be maybe some more periods of consolidation. Usually when a pair is trending that much, though, like the dollar yen, it will go into consolidation. So maybe the second half of 2015. AUD USD would expect downtrend and then bounce up. Oh, wait, and it says live charts. Okay, let's take a look. Here's dollar yen. Oh. Obviously, we're getting into more and more resistance, but as long as this momentum lasts, we could easily still get a consolidation and then a follow through like that. For instance, that's what I would be expecting. The Aussie, basically strong downtrend, so we would have to get into some good support zones before seeing a pause. So expecting downtrend simply to continue. Of course, if there's dollar strength, I would expect that versus the Aussie as well. Ultimately, commodities like gold, I think still lower. Here, let's take a look at it. Let me clean the chart. That's why the Aussie probably will also have some more downside pressure to come. Ultimately, this upside seems still very corrective. And therefore, if I had to make a forecast on XAUUSD, I would still expect it to go lower. Let's put a fib from here to here. And probably go to 2075, 1100. Now, ultimately, in general, from the entire economy, I mean, or world economy speaking, we'll have to see, of course, how the U.S. reacts to global developments and their rise in economy. Will they indeed rise interest rates? For instance, in a way, I'm expecting a bit of a turbulent year in 2015, so be careful. And curious how that actually will pan out. Curious how the market will react after the dollar strength, and we'll have to see what happens after the dollar strength in the second half of 2015. The reason why I'm not making as many forecasts as last year is just because I think it's going to be turbulent. Because many pairs have made reversals to the mean. Like for instance, the Aussie was overextended, a reversal to the mean was bound to happen. So the Aussie is making that. The Aussie has reversed to the mean. So all for me to say left is, okay, we'll eventually make maybe more reversals to the mean, but then what? Who knows? We're a bouncing spot maybe. Will it make some consolidation? That's why it's a bit difficult. When it's kind of extended, it's a bit easier. When the euro dollar was in a big wedge, it was easier to call this than when price makes the fall, and then what? Is it going to be bouncing? You have to see how price reacts at that point. The same with, let me think, the dollar yen. The forecast for upside because of the overextension. But what happens if it goes back to the mean? Well, basically we have two options. Eventually, of course, it is going to either stop, go flat, or make some retracement. For the moment, though, the main forecast is actually continuation, and then flat or some retracement. But it's easier to make forecasts when it's overextended rather than price going back to the mean. And many of these trends that, like on the Aussie, the yen, the euro, the dollar, the pound, have made that further extension and, you know, are now going back to the mean. Dollar Swissy, by the way, in that dollar strength, I expect dollar Swissy to go back to the mean as well. And what is the mean for the dollar Swissy? It would be going back to 107, this 107 target. That was something I was already thinking of when this happened. Eventually we'll go to 107. That is also a call where you had overextension and a reversal to the mean again. So that is another forecast that I wanted to add for next year, at least 107, if not 115 even. But the main forecast for next year, I think, is really the dollar strength. Otherwise, I don't see any particular pair that, as last year, that I'm a particular fan of mentioning something. If anything, perhaps yen consolidation eventually. And Swissy to some Swissy weakness, basically. All right, so that's all from my side. Forecasts, of course, are always forecasts. They're just attempts to make a model for trading. Forecasts are used in many fields, like weather. Whether we as humans will be able to make better forecasts, I think so in the future. I think there's a lot of data out there. Each time the data can be confusing. It's going to take some time to be able to understand all that data. Now there's just a lot of data created, but there's not really, it's difficult to interpret all of that. I think our forecast probabilities will be getting better, our forecast, but in general, for trading purposes, once again, it's just an indication. It could create a bias. You have to be careful for that as well, that a forecast doesn't make you blind for potential setups or bad setups as well. All right, so just a side note on that. So with that said, I'm going to pass it over to Antala, and I wish you all happy trading.
Thank you, Steve. Thank you for such a great presentation. Today, I will definitely show you some examples how I think that the trend might continue and that some trades might continue. So actually, I will show you potential setup right now, okay? Right now for euro dollar, but have in mind this is a totally counter trend setup. So if you want to take it, okay, do it, but please do it with a really low risk. I will, yeah, Justina is saying congratulations with SMB decision. Yeah, that is the part of Euro Swissy presentation now at the moment. So yeah, Euro Swissy finally gave us some movement, but we had a, I cannot say that is a great movement. I expected a lot more, to be honest. Yeah, it gave us some 70, 80 pips, but that was only about rate cuts. So they went into negative territory, and now the problem is what will happen? What will happen if Euro Swissy drops down to 2010? I expect again probable drop to 2010, maybe 2020. And then maybe intervention. If that happens, I'm not sure that it will happen, but if it happens, it might be, again, good for buying. But let's start first with euro dollar, okay? Euro dollar chart. I will go first with these little slides, but I will switch to definitely to live charts. Live charts is always better for this kind of presentations. FOMC meeting had a great impact, and definitely this last meeting could have, and it still has a great great impact for 2015 because we expect rate hike on dollar during maybe even the first quarter or second quarter of 2015. That will definitely be definitely will bring the strength into dollar. But you know, dollar cannot be strong forever. So until then, we might see some up and down movements. Okay, this week could bring some buying into euro dollar. I know that this is totally off the board now. It's I can say totally counter trend, but you know, I like to take from time to time those counter trend moves, especially because euro dollar now is sitting on the big support. It's 22.80, 85, and the biggest support here is 22.40, 43, as I remember. Yeah, 22.43 was the low. So definitely it's only 40 euros, 40 pips of a risk, and if profit taking takes place, and now it's 18th of December, we might see some good buying prior to New Year up to 24.50. And I will explain why it could happen. Now, I don't say it will happen, but it might happen. Then we expect ECB quantitative easing program, which could be announced after the Christmas and after the New Year. But the thing is, if that happens, that will again drop the price of euro dollar. But you know, shorting it at 22.80, it's just not logical to me. It's just not logical to me. So if these things happen, I think definitely that euro dollar should be higher, not low as it is now. But then euro should weaken. Maybe it's not quarter one. This is a mistake. Maybe in quarter two, when the program is announced and when FOMC rates get hiked, then we could expect weakening. But now at the moment, I think that I will show you now real charts. Guys, what I would do now is look at this. This is definitely bearish. Yeah, I know that. But now it's 22.70, 75. And again, this is huge support on weekly chart. So 21.35. But if you want to go long, you should again remember that a last big support is this 22.46. It says 22.46. Okay, so it should give some support. Now if this low breaks, then we should go look. Definitely the first target is 21.35, but it's too low now to get shorts. So there, as I say, counter trend trades could be played, but with low risk. Definitely low risk. So low risk, and stops should be definitely at 22.40. So it's only 35, 37 pips of risk, and I say go, of course, if you want to go up, if you want to go long, then this is the time to go long, okay? Not when this low breaks. So that is the only potential setup I can see on euro dollar now, because today I made the analysis and it definitely went to 23, I think 40 or 50, but my first place to short it was 23.60. It doesn't matter, and it dropped to the target. Now look at weekly. This weekly is pretty much strong, and if you drop down to daily time frame, you can see that this is inverted head and shoulders, a sort of. But the thing is, the move which gave us this high was caused by ruble weakness, but also it was caused by euro buying. And yesterday's move was caused by euro selling. So it gives us the opportunity to possibly go long now and look at this range. And it still can form a sort of, but it's daily time frame, inverted head and shoulders on daily time frame. Okay, now it's totally, as I say, counter trend, but this expectation can come in play. It is playing out now, maybe. We will see until the end of this month, but if you are still thinking that this pair could be long, then definitely low risk is now. It's 30 pips stop loss, 35. And if you go with low risk, it's really nothing, okay? But, you know, we might expect that to happen. And then if we switch to weekly time frame, what has happened in the year of 2014? Look at this. We had a huge bearish wedge on weekly time frame. This is bearish wedge. And by all means, this is bearish wedge. You don't have to be a science doctor to spot that this is a bearish wedge. Does it look like bearish wedge? Definitely. And look at this, breakout, retest. And this is all weekly chart. So once this level was broken, retested, it went downwards. Look at this drop. This drop is huge. It's huge. Now, let us, it's too low for me really to go short. So that is why I'm saying potential counter trend trade. And look at this, the retracement from this low, and this was the start of retracement, this weekly candle. It didn't touch 23.6. So this is huge drop on weekly time frame, and yet the retracement is, this is second to none. This is not a retracement in its full sense. So how long euro dollar should weaken? How long? It's very close to this important support. It's very, very close, guys, to this support. And look at this level which I marked here, 2246. Okay, look how strong it was. It in the history, this level gave buying of almost 1,000 pips. This is the history. Okay, the history when this level was bought into here. Almost, it's 900 pips to the upside. So if this level holds, we could expect some jump, and definitely we cannot use, I'm not sure that we can use now weekly retracement, but we can go with, basically we can go with target that was just prior this fundamental drop. This is fundamental drop. This is not technical drop. And this fundamental drop happened yesterday after FOMC decision. So this fundamental drop, usually fundamental drops are countered, faded. And some traders like to counter fundamental drops. So FOMC gave us a big bearish candle on daily time frame. This is momentum candle, but this momentum candle does not have any retracement, and now it's being sold again. So maybe just from I'm maybe 1% of guys who think that, traders who think that this could go up, but take it with reverse, because totally counter, but it could go to 2450, 2470 even, because this level needs a retest. It was caused by fundamental factor, not by technical factor. And traders who want to fade the movement, and usually big funds do that, we can maybe expect the retest of this level. So hard decision, I know. It's always harder to go counter trend, but you know, when you have 30 pips stop loss, well, you know, you can maybe make, I don't know, 200 pips. It's good risk to reward. Okay. So this can happen. Now, what I expect in 2015, I expect, as I said, I expect first a jump, then drop. But, you know, as Chris said perfectly, I just don't like predictions. But it's long-term prediction. But from the now standing point, from the current standpoint, we might see some rebound. Then when ECB announces its quantitative easing measures, we can expect a drop. But it's too low now to drop 300 pips. These are levels where euro dollar was heavily bought into. And these levels are very close to 200.00 line, which is definitely psychological support level. So it's only 278 pips to psychological support level. I'm not crazy to go short now, really. Then better to leave it than to go short. Even though if some things could happen and euro drops heavily from this point, really, for me, it's impossible to go short now. So I would definitely wait for a retrace, at least to 20. My prediction, my analysis today show two levels: 23.60, 23.95. Now, if it goes to 23.95, it could give some sells, but it's not logical for me now to sell euro dollar. It's too low. It's really too low. So up, and later in maybe quarter two, it can go down. But I can tell you one thing: if this drops to 20.00, guys, be ready to buy heavily. That level is heavily protected. 1.2000. Okay, that level is heavily protected. So we will see if that will happen. But at the current standpoint, look at this. This was the low of 12th of August 2012. After that, it went 100 pips to the upside. So it's not illogical to expect it again, right? It's not illogical. So let's see what will happen, but that is my view for euro dollar. Now next, Paris pound. I think pound will definitely go up. It's still strong. UK economy is stable. Results are very good for UK economy. GBP could definitely strengthen, and just pay attention to GBP crosses. They're pretty much strong. So pound is a strong currency. And contrary to dollar, which is also strong, GBP dollar has now today, in today's market condition, I mean just for this day, look at correlation between euro dollar and pound dollar. Euro dollar went down, pound dollar went up. Okay, so euro dollar went down, pound dollar, and those two pairs are usually correlated. Now, if pound dollar went up, maybe we could expect now a drop of pound dollar and a rise in euro dollar. That correlation needs to fix, and those two pairs should be correlated again. Okay, so the thing is about pound dollar, guys, I think that now pound dollar can. This is interesting. This is, guys, interesting. Do you remember how we traded those momentum candles? This is momentum candle, okay? This is momentum candle. Look at this, straight from 61.8. If pound dollar gets here around 70, also you could have sold it here at 56.75. Now I know that most of you have been visiting mine and Chris webinars, and you definitely remember how to trade these momentum candles. Pretty much easy, because I did this method and I showed you the method. And this is the first drop, and if this happens to come here, it should drop again. Okay, so even for this move now, if this drops, euro dollar should go up just to make an equilibrium between correlation of euro dollar and pound dollar. So pound dollar could drop in next couple of days. Euro dollar could go down, but the thing is, on a longer term perspective, pound dollar could go up. Now take a look at this. This was the moment basically in 2013, okay, 2013, and then it dropped out of this channel and it went back into this channel. It went back into this channel. You can see this into 2013. And the thing is, in 2014, it stayed in the channel. And look at the alignment of the channel. This channel it's an equidistant channel, but the channel slope is to the upside. Okay, the channel slope is to the upside.
So I expect again the pound to be bought again. Okay, but it should drop now. It should drop now, and you can see it started to drop, and it might drop to this level, 54.30, and then it could possibly be bought into. I think that this level will be bought into if this drops, and then it might start a new leg to the upside. But I expect really for GBP to be strong again, and definitely we should pay attention to this level, 54.30, because it was previous double bottom. Look, it was double bottom, okay? It's a little bit lower, 20, yeah, but I can say it's anywhere from 20 to 40. So from 20 to 40, definitely from 20 to 40. I remember I had this level charted also on my historical levels. Yeah, that is the zone, 40 to 20. So pay attention to these levels, and we could see some upward movement for this point. Then later in the year, I think that pound will go up again. At least it looks from the movement now, UK economy stable, really. And pay attention to this daily candle. It really retraced a lot, in contrary to euro, which didn't retrace at all. So for correlation to be back again, they should move in the same direction. And we will see what will happen, but now correlation is negative between those two pairs, which is uncommon, okay? Now let's move to AUD. AUD should weaken. That is definitely my opinion, because the president of Reserve Bank of Australia said that it's better for AUD to be on 1.7500. Definitely traders have this in mind, and I think that Aussie should be shorted into rallies. We can see from this is, let's see, daily perspective. Look at the daily chart. It's really too low, and this is really how pair who is moving fundamentally and technically looks alike. If this low is broken, 80.65, that will be the first sign, of course, to go to 75.00. It won't go directly, but definitely this pair is bearish. Look how many weekly candles there are. 1, 2, 3, 4, 5 bearish consecutive candles. So this level might be a jump into, then we can see some retracement to the upside, and then when retracement ends on weekly chart and drop starts, that can be an investment to investment. I am not talking about daily trading. I'm talking about investment. It can be jump to 70 to 75.00, 75.00, and that is what Reserve Bank Australia president, okay, thinks, and that is pretty much a good cue for all of those traders to go short. And look at this, it's perfectly in correlation with the low of, yeah, this is the low, 74.50. So round number, don't forget that banks are trading around numbers, so this can go, this could go down, touch the level 80.65, then go up again, retrace, and then drop to 75.00. And I think that AUD should weaken just because of fundamental things which president of big central bank said at his last conference. Euro yen, for me, it looks pretty much strong. Euro yen, it looks strong. And look, we had a huge drop, 1 swing, 2 swing, 3, 4 swings on weekly time frames. Then in 2012, this euro yen went up 5,000 pips in 2 years. Okay. And what happened is now on weekly time frame, we have a nice trend line. We have a nice trend line. Judging by weekly time frame, As I already told you, 150 level is strong, and euro yen came very close to test 150. So if this level is broken, 150, next target is 153. 153. Why 153? Because it's next big retracement, and this is a huge Fibonacci, driven from the top to the bottom on weekly time frame, and it could take months to achieve that, but I think euro yen is buy into dips, okay, and still think it could touch 153, okay. So this chart tells us everything. It could drop, then be bought again, but remember, this is weekly time frame. On weekly time frame, it surely looks bullish. And if this level breaks, 78.6, next retracement on weekly time frame is the target. Okay? Euro Swissy, definitely supportive. What can I say about Euro Swissy, which I haven't said before? I would continue to buy into dips, Euro Swiss pair. This reaction which happened today was a reaction to basically what I think about Euro Swiss. I think that Swiss National Bank had big problems with with ECB announcing quantitative easing, and it also had big problems with yesterday FOMC meeting. So this was not intervention, guys. Bear that in mind. This wasn't an intervention. This was market reaction, knee-jerk reaction to lowering their LIBOR rate or their bid rate. So they went into negative territory, cutting it to minus 0.25. It could go to minus 0.75, but they didn't sold Swiss. Swiss was sold by other market players who basically, when cut was announced, cut is always bearish in Forex market, and rate hike is always bullish in Forex market. When Swiss National Bank cut its LIBOR rate, investors pulled out of Swiss of cash money, and basically that caused the reaction for Euro Swiss to jump. That is a temporary measure of Swiss National Bank, because they are having big problems with support of the floor, because now everyone again is trying to short Euro Swissy, and they are trying to provoke Swiss National Bank to go for a intervention. If Swiss National Bank intervened, this level should have been broken, and it should at least go to 21.55 and then 22, 20 and 23 something. It doesn't matter now. But the thing is, this was not an intervention. This was only a temporary measure. So Swiss National Bank said, it's better that you sell Swiss than that we should buy all other currencies to weaken the Swiss. That is most logical of them. Because when they introduced negative rates, market basically bought into Euro Swiss. They sold Swiss, okay? And you look at correlation. Again, Euro Swiss correlation compared to Euro dollar. Now there is no correlation at all. Euro Swiss is pegged currency. Euro Swiss should go up, but SNB has very big resources. Listen to me. Swiss National Bank is at the top of the food chain in Forex market. This is the major player in Forex market. This is not an ordinary run-of-the-mill bank. This is not an ordinary average bank. This is top of the top central bank in Europe. And if they say that 1.2000 is supported, definitely go with this. Now, market might be provoking SNB to go again with intervention, and I will definitely be buying if it drops to 2020 or 2010. I will definitely be buying Euro Swissy again. Just because I believe in Swiss National Bank policy that they are protecting their currency policy. And if market provokes SMB to intervene, that will be huge intervention in Forex market. And that can bring Euro Swiss to 23.00 levels. Because I know that many hedge fund traders still have longs on 23.00 levels. So that is, guys, what I had to say now. And we will be, of course, paying attention how this will develop. We will have, of course, our standard weekly recap on Monday. I will present you new pairs, so be ready for that. Now, guys, yeah, these informations are definitely useful, so pay attention to those. I'm now, guys, if you don't have any questions, we might call it a day. So, of course, follow us, and we will see what will happen next week. But I definitely expect some good movement into the last week of this year. Yeah, I wish you all happy holidays for all of you who won't be trading and who are making a break. And I really wish you to have a great holidays, to enjoy, and we will be here with you. So talk to you soon. Cheers and trade safe.